what do you think about it? Have you learned from it? Have you been inspired by the course, and are you looking forward to the completion of it? Yeah, so let me hear from you guys on the chat section whilst we wait for a couple more people to join. Today's class is a very important one, probably more important than every other class you've attended. I mean, every class is important, but it was leading up to this point. You can't hear. Shanice cannot hear me. Why? Is there anyone else who cannot hear me, or is it because I was speaking low? Anyone else who can hear me, please? Talk to me, guys. Is there anyone else who cannot hear me properly? Roy can hear me. Mohammed can hear me. Anyone else finding it difficult to hear what I'm saying? Anybody finding it difficult to hear what I'm saying? I want to hope everyone can hear me. Can you all hear me? Okay. Okay. All right, then. So, okay, amazing. Shanice can hear me now. If you need any help, just put in the group, and then someone will help you from the team. Amazing stuff. All right, then. So everyone can hear me now. We can carry on now. Good, 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 good. Okay, so I'm going to share my screen, and then we're going to look into the business of today. Before I share my screen, let's do a quick recap of what we've done so far. So we've talked about the market, we've talked about the sub-markets, we've talked about the fact that every sub-market has its own instruments, and the instruments are the assets that you can buy or sell in those sub-markets. Okay, so for instance, in the Forex market, you will not find crude oil in the Forex market. Crude oil is not an instrument of the Forex market. It is an instrument of the commodity market. Okay, so in the Forex market, you will find instruments like USD JPY, Euro USD. These are currency pairs, and these are the instruments of the Forex market. Okay, and you will not find Euro USD in the indices market, because they are not the instruments of the indices market. They are the instruments of the Forex market. The instruments of the indices market are the likes of FTSE 100, FTSE 250, German 30, CAC, which is another name for France 40, Italian 20, US 500, US Tech 100. Those are indices, okay? The Dow, DOW, the NASDAQ, those are indices, okay? And again, indices are just a collection of, they are indexes of the economy of different nations, the collection of the top companies in those nations that reflects the strength of their economy. That is the index of that nation, okay? And of course, Forex is just currencies, exchanging a weaker currency for a stronger currency, taking advantage of whatever is driving the price within a particular time frame. Commodity is commodity, okay? We've got the energies, which are crude oil, natural gas, heating oil. We've got the precious metals, gold, silver, platinum, palladium, copper, high-grade copper. And we've got the soft commodities, where you find the likes of cotton, cocoa, coffee, sugar, wheat, rice, foods, basically, and all of that things that fall into the category of commodities. You find them there. And you've got the base metals. You've got the companies and shares, Facebook, Amazon, Google. You've got cryptocurrencies, Bitcoin, Bcash, Litecoin, Beam, Ethereum, all of those. So these are sub-markets, and those are the instruments that I just mentioned. Now, good morning, Gilbert. Good morning, Sumi. I haven't seen Tony this morning. Have I seen Tony? No, I haven't. Okay. I mean, I'm getting to know you guys now, so yeah. I can kind of know who is here and who is not. We've got two Mohammeds. I've only seen one of them. I haven't seen the other Mohammed. Who else is not here? I'll find out and start using. I'll just remember. So yeah, so those are the sub-markets and those are their instruments. And I said there are only two actions you can take in the market. You can either be buying or selling. That is not paying money to receive something. Okay, it is Tony is at a conference today. Okay, amazing stuff. All right, then. So buying and selling in the global financial market is just predicting directions. Okay, it's about calling the direction the value of an asset will head towards. If you're buying, you're predicting that the value of an asset will go up. If you're selling, you're predicting the value of an asset will go down. Then it was always also worth noting. I hope you're making note of these things, writing them with your own hands, so that forms your own understanding of these things. Okay. Like I said, I can send you the slides. I can't put everything I'm saying in the slides, so the slides will still be more of like bullet points, and then I will explain it to you. And the intention of not writing too much on the slides is because I don't want you to depend on theoretical knowledge. It doesn't work in trading, okay? I want you to listen, understand, and the knowledge stays with you forever. It's as simple as that, you know? Someone giving you plenty of notes to read doesn't make any sense in trading, because when the market opens, when the clock goes and the market opens and the numbers start flying, everything theoretically flies out of the window. Like you see your money evaporated right in front of your eyes if you made a bad decision, and you won't remember anything theory. I'm telling you, emotions kick in, your temperament is tested. In that moment, you don't have time to be going over lessons, you know? So that's why you don't just do, I mean, think about it. Doing your driving test, you know, the theory covers everything driving. You know everything driving. You even know how to, you know, control a car. You know everything. You're supposed to. You passed your driving, you passed your theory test, but you have to do the practical. Okay, where all those knowledge you've read becomes something you apply. Something you apply in an instant. And the reason for that is when you start driving, scenarios will change, things will happen. And when that happens, you're not going to be thinking about, or if it was on the top page of the booklet I was reading to study for my theory test, you don't remember that. You know, if you're on a motorway and something happens, you know, you don't have time to remember what page your reaction should, where you read it, what page it was on. No, you need to act in that moment. The same thing with trading. When you start trading, when the market is live and your money is in there, or you sent your money out there to make more money for you, you don't remember jumps. You want to narrow down your action to, you know, A or B. So that is why I don't want to give you information where you can say, oh yeah, I have something to go read. No, don't read anything. Write your stuff down, look at it, understand it, and move on. Does that make sense? This is how to trade for me. I don't believe reading stuff makes you a better trader. I think, you know, taking refined actions, learning from mistakes, and just that's what makes you a better trader, in my own opinion, anyways. So yeah, so guys, talk to me for like 5 minutes on the chat, and then I'll get into what we need to do today. Basically today, I'm going to be starting with technical analysis. I'm going to be showing you how to understand charts, how to interpret charts, how to look at the chart and make sense of it, because the chart is saying so much, you know. So I'm going to show you how to interact with charts, how to see price actions, things that have happened in the past, to be able to predict what will happen in the future, because what you see on the charts are graphical representations of the activities of people in the market. Okay, and we're all creatures of habits, so we tend to behave the same way under the same kind of conditions, and trends, patterns tend to repeat themselves. So if something has happened before and you've seen how people reacted to it, if that thing is going to happen again, there is a very high tendency that people are going to react the same way. Okay, people who haven't studied trend, to them it's going to be like suspense, or we don't know what's going on. But people who understand trend will just know exactly what's going to happen. Okay, is it absolute? Is it 100%? Maybe not 100%, but a very high percentage. Over 90% of times, trend patterns repeat itself and tends to form a trend. And that is what we trade in trading. If you know trading, you understand that we just trade trends. We want to spot the trends and we want to jump into the trend as early as possible so we can ride it for as long as the trend will go. So, yeah, so how have you guys found the trading course so far? Before I share my screen, I want to do that before I share my screen. Use the chat to respond, guys. How have you found the trading lecture so far? Has it been informative? Roy says it's very much informative. Thank you, Roy. Anybody else? Doing great. Amazing stuff, Mohammed. Doing great. Mohammed, did I meet you in King's College at KCL Open Day? Was that where we met? Very detailed, Shanice. Thank you, Kenneth. Yes, amazing stuff. Amazing stuff. This is really good. It feels good to know that we came out there to speak to you guys, and you guys actually came. This is amazing. I love that. Very educated, Gilbert. Thank you very much, Gilbert. Okay. Sumi, I haven't seen you in I think the last time I saw Sumi was last week, Saturday, isn't it? It's been good. The explanation are easy and informative so far. Amazing stuff. Amazing stuff. Amazing stuff. All right then. Just to mention, I've been able to record the first class that was missing. So we've got all the classes now. So all the videos will be on YouTube today, okay? Including this one. All the videos will be on YouTube today. All the lectures we've had so far. So you can go listen to them again if you like. Good explanation of easy informative. Sorry, I couldn't join on Wednesday. That's it. You see, now I know you guys, okay? I know that I didn't see so many. I felt like there's been like a space in between somewhere there. So it wasn't there on Wednesday. That's why. Okay, amazing stuff. So let me share my screen now and then we get into the business of today. So the consensus is everybody understands what we're doing and we're making progress, which is good. All right then. So the last, I hope people like Shanice have still found a way to catch up. Anyways, I have a very, very strong conviction that nobody will be left out. You will understand, you will get it. You will understand, you will get it. You will understand and you will get it. Okay, amazing stuff. You've gone through all the slides. Cool. I mean, if you have any question, just ask me. Okay. The good thing is you know me in person. So, yeah. So the last thing we were talking about was market analysis, and I was saying that you cannot trade without doing this. You cannot trade. You will be going into the war with a blindfold on your eyes if you get into the market without analyzing the market. It just doesn't make sense. Okay, it doesn't work that way. It never will work that way. You have to be good at analysis to be able to make sound decision. Okay, you have to be very good at analysis to make sound decision. And I was saying that these different analyses are like the legs of a stool. Okay, you cannot just say, "Oh, I find this particular analysis very comfortable, so I'm going to just stick to it. That's all I'm going to be doing." That's a terrible way of trading, to trade. I mean, that's a terrible mindset for any trader. Okay, you want to make sure that you pay attention to everything that affects price in the market, because what will happen is if you focus on just one, when the other two kicks in, you wouldn't know what to do. You just be shocked because the market has over $1 billion to throw. I think someone else just joined and see who that is. Okay, cool. I think it's okay. It's muted, it's sound, so it's fine. Cool. So the market has over thousands of tantrums to throw at you. That's why the longer you trade, the more you master those tantrums. You can tell. I think I was showing my charts to someone on, for some reason now, people tend to just peep into my chart when because I'm trading everywhere I am. So I could be out and about and I'm still trading. Actually, that was how the second Mohammed got to me about the course. He was just next to me. I think I actually went to the barber shop, I think I was actually at a barber shop and I was just looking at my chart and he must have seen it. So he waited for me to finish. This is really, really amazing, by the way. He waited for me to finish. So I stepped out, about to get on my way. And he just walked up to me and was like, oh, hey, hello, bro. I was like, hey, hello. And, he's like, oh, yeah, I saw you looking at your phone. I was thinking, well, why the hell are you looking at me, looking at my phone? And I was like, when I saw some chats in there and I think, oh, are you a trader? And I was like, yeah. So, oh, yeah, I used to do it, but I want to learn more. So I said, oh, yeah, funny enough, I'm actually running the course. Do you want to jump on it? He was like, oh, yeah, I really want to do it. So, yeah, that's how the other moment came. So I was showing someone my chart and I was explaining to them how the technical analysis works. The point I'm trying to make is you cannot be a one-sided trader. You won't be a trader at all. You're not a trader at all. Okay, so so we talked about fundamentals last week. Anybody can remember what fundamentals are? Please use the chat section. I don't just want to be talking to you. I want you to, respond to me. I want to know you understand what we're talking about here. So what's fundamental analysis? What does it mean to do fundamental analysis for any asset? So let's pick an asset now, for example, gold. Say we want to go into the market and we want to trade gold. What is fundamental to gold? What do you understand as fundamental for gold? What would you be analyzing as the fundamentals for gold? Or Forex, whatever, man. Or Forex. Fundamental, Roy, thank you. Fundamental factors, politics, climate, festivals, thank you so much. That is it. That's it. Boom. That's it. So fundamental factors are domestic factors that affect the price of an asset. Okay. Something that has the ability to drive price up or drive it down. Okay. And it's fundamental, it's basic. It's just the first things that comes to your mind when you think about an asset. So if you think about the pounds as an asset to trade, the first that comes to your mind is Brexit, except if you're living under a rock, okay, like someone that I know. But if you're living in the real world, you want to think about the election coming up in December, the one they just agreed to. The election coming up in December is going to play a major part. The Brexit negotiations playing a major part. And of course, there are different reports and numbers that come out, policies, the bank legislations, things like that, employment rate, unemployment rate, consumers numbers, retail numbers, all of those things, manufacturing PMIs, manufacturing numbers, all of those things affect the price of different assets, okay? And of course, there will be some fundamentals that are common to different markets, okay? And there will be some that are just unique to some particular markets, but fundamental is fundamental. And how do I do fundamental analysis? The internet is your best friend, okay? The internet is your best friend. And just being current, being someone who loves information, someone who loves to be current. Just get updates about what's going on around you in your world. Like the funny thing is the information that you need to trade are things that are around you every day. It was just because you wasn't a trader before, so you wasn't thinking like a trader, so you didn't care about this information. Like if any of you watch the news, if you put on the news, at the bottom of the screen, you would see the numbers going, it scrolls past, you will see it. And they would not complete a news without talking about the FTSE. If you watch BBC or whatever, you would see those things there. You just didn't care about it before, but now you care about it. And obviously what they would say are the basics, okay? But things that they say on news, like, or the tension in the Middle East, or blah, 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 we're talking about the elections, talking about the this, talking about how people are reacting to certain things, we'll just tell you, because most people that are listening to those news are traders, okay? And they're watching those news to pick up information. So you will be picking up those information, and of course, your friend and brother is the internet, okay? Google is your best friend. It's just that the more you trade, the more you know where to look. And when you have a community like this, a forum like this, and I would expect you guys to start using the group chat very, very well when you start trading, because you're gonna want to ask people, well, guys, what are you guys thinking about this? Okay, it's always safer to trade as a community rather than as an individual. So technical analysis, and let me jump to sentimental because I don't have much to say about it. Again, sentimental analysis. Yeah. So who wants to say something about sentimental analysis? What is sentimental analysis? Yeah. So anybody else? Because technical is the one that we're gonna spend time on. We're gonna do technical analysis from now till the end of the course. Okay. Every other information I will tell you in between the lectures when you need it, when and where you need it. Technical analysis, we're gonna do it from now to the end of the course. Okay, and we're gonna be trading, and we're gonna be looking at technicals, and we're gonna be trading, and we're gonna be refining the technicals, because fundamentals, it changes. It's always there. It's things that are happening as you sleep and you wake up. Sentimental analysis as well. The news is always there. But technical analysis, I think, is something that you need to learn, you need to master, and then it's a tool that is very, very crucial. Sentimental are what people around you are saying about the market. Thank you, Chinese. Boom. Well, that's amazing. That's simply it. Okay, so sentimental analysis is what people around you. The only thing I will add to that is what influential people around you. You wouldn't care less about someone who doesn't know about the market, what they're saying about the market. You don't care. If someone who's not a trader, who doesn't have the eye for the market, has an opinion about the market, who cares? Yeah, right. You can say whatever you want to say. But if someone who is a trader or who works in the finance industry or who has access to information or knows someone who have access, or which is someone who loves to consume economic numbers, or some of you who study economics and you do extensive research about certain topics that affect global finance, if you have something to say, I would listen simply because you are at it. Okay, so sentimental analysis is analyzing the sentiments of people who are actively participating in the market and who knows what they're doing. That's sentimental analysis. And I said on Wednesday as well that sentimental analysis is actually the strongest price mover. Okay, people follow people. It's as simple as that. It's as simple as that. Even if a natural disaster happens, people still rely on people to interpret how bad that is to them. Okay? So for example, if a bomb should go off in the Middle East now, or if an attack should go off on an oil tanker from the Saudi Arabia now, Saudi is the top and the biggest oil producer in the world. So whatever happens to the oil in Saudi affects the oil in the world. So if an attack should be, even if there was an assault on a Saudi Arabian oil reserve, for instance. Now, that is a bad news. That is bad. But traders they will still wait to hear what, for example, Goldman Sachs or what OPEC has to say. Okay? That is the power of sentiment. Even though it's bad, they're thinking, oh, so how bad is this now? How should we price it in now? How bad should we take this information? Is it terribly bad? Is it mildly bad? Is it fairly bad? Is it all right? All right. Does that make sense? So sentiment is very, very powerful. If a news headline comes out now saying, oh, the employment rate in the UK has hit 30 years all-time low. Whoa. To a layman, is whoa. But to a trader, he's still going to be thinking, oh, let me go check FX market. Let me go check this website. Let me check Bloomberg. Let me check this guy that I follow to hear his take about it. Like, is it really bad? Is it really bad? Was he anticipated? Was it a shocking news? Sentimental is very, very powerful. And of course, news is news. There's nothing to say about it. News is just news. So today we're going to be looking at technical analysis. So I want to share a slide. I've actually got a different slide from this one. I'm going to share it. show you a couple of things, and we will, okay, actually, before I share that one, I think I still got some things to show you. Just give me 1 second. Can you all still see my screen? Can everyone still see my screen? Please let me know you can still see my screen. Yes, okay, cool. All right, then, so let me show you something quickly before, what's time now? Okay, for about now. Yeah. Okay, so this is just for a note. In order to make a balanced decision, in order to execute good trade entry, all analysis points must be factored in. In order to execute a successful trade, good entry and exit is key. Okay, so no matter how sure you are about the direction the market is going, you want to get in at the right time. If you get in at the wrong time, your analysis may be right, but your timing could be wrong. Okay, good analysis, bad timing, terrible trade. Okay, bad analysis, good timing, that doesn't even exist. I mean, you can't have a bad analysis and have a good time or have a whatever, man. You understand what I'm saying? So analysis is very, very important, and much more important is your timing. Okay, because the most frustrating thing is to know that you was right, you just took your action too early, you know, or too late. So timing is very, very key in trading. Again, we'll look at that. We'll see how to time trade entries. Okay, so technical analysis, we're going to be looking at that from today. And like I said, we'll build on that. We'll go from phase to phase, and then from there, we'll go to technical indicators. And then we'll just keep going until all of you become traders. Okay, that's my goal. So we're going to be looking at chart types. Okay, we're going to be looking at chart types. We're going to be focusing on the candlestick charts. Okay, I will show you the different chart types, but we will be focusing on the candlestick charts. Okay, and then we're going to be learning how to spot patterns on the charts. I'm going to be showing you how the patterns form trends, and I'm going to be showing you how to trade the trends. And very, very important, one of the strongest tools you will have in your pouch is anticipating reversals. Reversals is everything. It is whatever goes up will come down. In trading, whatever goes down as well will go up. That would be very weird in lifetimes. I think the one that is valid in lifetimes is whatever goes up will come down. When trading, whatever comes down has to come up. Okay, the point where what's going up stops and begins to come down, that is the reversal point. Okay, and whatever is falling, the point where it stops falling, turns around and begins to rise again, that is the reversal point. So reversal is very, very key. So for example, if you was buying gold and it's going up and it's going up, the higher the price goes, the more money you're making, because you jumped into the trade predicting the value was going to go up. Now the value is going up. Now you're smiling. Now your profit is rising. Now your profit is rising. Now gold is now hit the ceiling now, and a reversal is about to happen. But you don't know jack about reversal. You're just excited, happy that price is going up. I remember this happened to me a few years ago. I was still, I wouldn't say I just started trading, but I have not learned everything there is to be learned. So I took this trade on crude oil. I jumped in trade in a good time. And this time I was working, So I took the trade, and the trade was making me £1,000 a day. Okay, the trade was making me £1,000 a day. So every single day, I would end the day with my investment has gone up by £1,000. So I was excited. So imagine a whole week, yeah, and the salary of the job that I was doing then was not even up to, I think, was it up to £1,000? It was just about £1,000 a month. Can you imagine? They pay me every week. Okay, so it's about 250 something pounds a week I get paid. So in a month, it's just over £1,000. And every day I was making £1,000. Every day. It's like Monday, 1,000, Tuesday, 1,000, Wednesday, 1,000, Thursday, 1,000. And I was thinking, oh my God. So you can imagine, I go to work, I couldn't care what anyone was saying to me. I don't care. I'm just thinking, look, I'm going to do this job to the end of the month. But at the end of the month, I have 30K. And I'm going to quit in a very, very grand style, you know. That was my plan. But I didn't understand the reversal then. Okay? So market was going up, 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 up. And then there was a Tuesday. I remember very, very well. It was a Tuesday. And I'd seen about 900 and something pounds of that same day. You know, it goes up 1,000 every day. So in the 1,000 of this Tuesday, the price already reached over 900 pounds. So I already thinking, yeah, 1,000 pounds in the bag again for today. And then the reversal happened. And then it began to go down. And I just didn't know what to do. I just didn't know what to do. I'm thinking, okay, well, every day price goes up, pulls back down a little bit, then goes higher, pulls back. So I just felt, yeah, it's just one of those, you know, pull back down a little bit. And all the profit I'd made disappeared right before my very eyes. It was a terrible experience, really, really bad experience. So reversal is very, very key. Yeah, and these are the key terms that you're going to be hearing me talk about a lot. I'm going to be mentioning them a lot, so you want to get used to them. Okay, resistance, support, channel, trends, range, highs and lows. Okay, these are the fabric of trading, of technical analysis of charts. Okay, resistance, and as a trader, if you're going to speak to another trader, okay, these are the terms that you would hear a lot and you would use. And if you're talking these terms to someone who trades, they already know that, you know what you're saying. Okay, you're talking about the resistance, the support, the channel, the trend, the range, the highs and lows, and of course critical price points. So let's have a look at some interesting stuff. So I'm going to share another. Did someone else join? Was we talked before? Let me see. Someone else joined. It was 11 last time I checked. Okay. Someone called T. Okay, amazing stuff. So, yeah, so let me share this chat with you guys. Can you guys still see my screen? Please confirm that you can still see my screen. Yes, can see it. Can see it. Okay, cool. So what can you guys see right now? Tell me what you can see. Can you guys see single candle pattern? Can everyone see single candle pattern? Single candle pattern. Okay, cool. Okay, so yeah, well, you can see it. Amazing stuff. All right, then. So let's have a look at these candlestick patterns. Okay, so first of all, the candlestick was an invention of a Japanese guy. Okay, so it's from the history. The background is from Japan. Okay, it's called Japanese candlesticks, and it was this Japanese guy who invented. And you know, those Asian guys are very good at maths and stuff. So they invented these Japanese candlesticks to graphically represent or illustrate or display price actions. Okay, it typically it's a graphical representation of the buying and selling activities in the market over time frames. Okay, so each candlestick is made to represent a time frame. Okay, and it ranges from 1 second it ranges from 1 tick. Okay, that's a fraction of a second. I doubt if you ever look at that, to be honest. To 1 minute, to 5 minutes, to 10 minutes, 15 minutes, 20 minutes, 5 minutes intervals, basically. In other words, every single candlestick that you see represents buying and selling activity within a time frame. So, for example, if this black candle right here, okay, so let me tell you about the composition of a candle first of all. Okay, so all of you are familiar with candle in the real world. You've seen a candle before. I want to assume that you've seen a candle before. Okay, so if you see a candle, you would see the body of the candle, isn't it? And then in that body is a candle wick, okay, like a rope in the candle. And at the tip of the candle, at the top of it, the rope, you would see the end of the rope where you actually light up, okay? And as the rope burns, the candle wax continues to melt, the candle gets shorter and shorter and shorter and shorter until the candle is no more, okay? So it's similar in this scenario as well. So if you look at this these candles are identical, okay? They're identical, and hence their names are inverted hammer and shooting star, okay? They are hammer candles, okay? And if you look at it, it looks like an hammer. It looks like an hammer that is upside down, okay? It looks like you can literally grab that thin bit and you can use the boxy bit to hit something, okay? So it looks like an hammer. By the way, so many things are named by what they look like, just so that it has a mental immediacy. You can see, you can understand what it means, and it can stay in your head, okay? Okay, so the candle, a typical candle is made up of the body, okay? The candle body and the candle wick. Okay, the candle wick is the thin bit, okay? And then the body is the thick box that you see. And candles will come in different shapes and sizes, and I will show you that now. You see different candles, but one thing that is constant is every candle should have a body and the candle wick, okay? And what that means is, in the lifetime of this candle, so let's say this candle represents a 1 hour period, okay? This is the buying and selling activity that happened within 1 hour. Okay, because these candles are black and white, okay, so if I was looking at a real chart, you will see green and red candles, okay, but for educational purposes, these are snapshots. So this red candle is the black one, okay, and the white candle is the green candle, okay. It's kind of like good and bad, okay. The bad is always black, the black guy is the black, and then the white candle is the good. It's like angel and demon, basically. Think about it that way. So when the market is going up, the angels are taking prices to heaven, and when the markets are going down, the demons are taking the prices to hell. I use that statement a lot when I'm trading anyways. If, for example, if the market crash, I would say price went to hell. Okay, and if a market booms and rallies, I would say price is going to heaven. That's just my own way of saying it. You can find your own way of saying it, but yeah. As long as you understand what I'm saying. So, so these candlesticks represent a time frame. So for example, say it was an hour. So within the hour, what this means is, can everyone see my mouse? Because I would like to use my mouse a lot in explaining stuff to you. Can everyone see my mouse? Okay, cool. So this candle represents an hour period, 1 hour. Within this 1 hour, for every red candle that you see, what it means is the price closed lower than where it opened. Okay, so at the beginning of the lifetime of this candle, price must have opened higher than when where price was when the timeline of the candle was over. Okay, that's my mouse. Okay, cool. So it means that, so when you see a candle, yeah, this is how to understand the candle. This is the 1 hour candle. Okay, it's a bearish candle. It's a sale candle. In that period, people were selling. Okay, hence why it was red. Red represents selling activities. Green represents buying activities. Okay, so in the life of this bearish candle, again, remember, in the lingo of trading, bullish is price going up, bearish is price going down. Bullish is buying, bearish is selling. Okay, so in this, so I'm going to be using those terminologies a lot, just so that you guys start progressing from being a beginner trader to an intermediate trader. Okay, you understand what this is. So in this bearish candle, in this 1 hour, the highest that price came is the top of this candle wick. When this, if you've ever seen a live chart, you see the price, the chart is jumping up and down, up and down, up and down, up and down. It gets longer, comes down, comes down, comes down. But every time it goes up and reaches a particular height, the candle wick stays there. The top of the candle wick stays there. Now the body is what will be fluctuating. The body of the candle will keep fluctuating, keep fluctuating, keep fluctuating. But the candle wick, every time it goes higher, or if it goes to the opposite side and goes lower, whatever level it gets to, the candle wick stays there, okay? Because from a chart, we're supposed to see in that 1 hour period, this is the highest that price came. This is the lowest the price came. You see a tiny bit of the candle wick under the body here. This is the lowest the price came, okay? So in the life of this candle, price opened at the top of the body, okay? So this is the body of the candle, and this is the candle wick, okay? In the lifetime of this candle, price opened at the top of the body, came this high, came this low, and price closed at the bottom of the body. That is a candle, okay? Every time you see a bearish candle, a sale candle, a red candle, what has happened is on the body of the candle, the top of the body, that was where price opened. And at the bottom of the body, that was where price closed, okay? So if you was to draw a line all the way to the end of the screen, so let's say price was at 10. Yeah, let's say gold was $10, yeah, at the beginning of this candle. It simply means that in the lifetime of this candle, maybe gold was expensive, the price came as high as $45, yeah, fluctuating. So open at $10, was high as 45, was low as 2, and closed at, say, 3, okay? That's a typical candle. Price opened at $10, yeah, at the top of the body. It was as high as $45, came as low as $2, but closed at, say, $3 or $4. Okay, that's a typical candle. Does that make sense to anyone? So if the price of gold closed at $15, that means the candle, the shape of the candle will be something like this, okay? And it will be green. Okay, so we will not have this bottom. This bottom will just be a long candle, okay? If price closed higher than where it opened, it will be a green candle, okay? So you would have something like this. Does that make sense? Got it. Cool. Amazing stuff. So reverse that for a typical green candle. When you see a green candle, it simply means price opened lower than where it closed at the end of the candle. Hence why it's a green candle. Price has moved higher. Okay, so for this particular candle, it's a bullish candle. Price opened here, went as high as here, came as low as this tip, and closed here. Okay, and that ends the 1 hour. And as soon as that 1 hour is over, the next candle for the next hour shows up straight away. And then price starts moving again. And then it goes as high as it will go, it will go as low as it will go, and to either close higher than where it opened or close lower. If you close higher, it's going to be a green candle. If you close lower, it's going to be a red candle. That is a typical candlestick. And then it just keeps going, and it just keeps going. And on your chart, you can choose to change what time frame you want the candlesticks to represent depending on what you want to see. So for every chart, you can make the candlesticks represent weekly. That means every single candlestick represents 1 week. You can have you can look at daily. You can make it represent 4 hours. You can make it represent hourly. You can make it represent 15 minutes. You can make it represent 5 minutes, depending on how much closer you want to look at the activities going on. So you want to say, I want to see what is going on in these 5 minutes right now. So I'm going to look at 5 minutes candle to see what's going on. Or I want to look at it over an hour. Okay, I want to see the hours of the day. I want to look at the last 5 days in hourly candles. I just want to see, again, when I open up charts, this will make more sense to you. So what that means is if you're looking at a 1 week candle, when you change it to daily candle, each 1 week candle will turn to five candles. Okay, 4 candles. 5 candles to be honest, because the market opens on Sunday, Sunday has its own candle. Okay, so the market opens Monday, Tuesday, Wednesday, Thursday, Friday, closes on Friday, but it doesn't open back on Monday again. It opens on Sunday night, trades for like 2 hours. It opens on 10 p.m. on Sunday night, trades for like 2 hours, and then the Monday candle shows up. So the Sunday still has its own candles, and when you look on the chart, it's always very tiny because, as you can imagine, not much happens. So you would see, when you see like ridiculously tiny candles, most often than not, they are Sunday candles. Okay, and some days, who knows, if something terrible has happened over the weekend. So, for example, on the Sunday trade for the Monday after the Saturday when the Brexit debate happened, the activity on that candle would have been significant because it was a Monday or the Sunday came after a weekend where a political activity had happened that has a very high influence on the market. Okay, so this is a typical candle. And by the way, like I said, candles comes in different shapes and sizes depending on the activity that happened within that time frame. Roy is asking a question. So logically, the close of previous candle and the open of the next candle should be the same. Logically, it should be, but it's not always the same. Within that split second, price could have jumped higher or go lower. When we open the chart, you see it. Ideally, the next candle coming up after the close of the previous candle, price should just open right next to it. But you would see it's always ever so offset, either offset to the top or offset to the bottom, depending on how much price has moved. Remember, price going up or down is depending on people's activity. So if price is going up and the candle closes and the next candle is supposed to open, within that split second, people would have clicked. Maybe people are buying, okay? People, maybe 50,000 people across different locations in the world have bought the same asset. And to buy is just literally go on your computer, click on the asset, click on how much you want, and press execute trade. Yeah, if 50,000 people has pressed execute trade in the split second, that would have pushed up the price. So within that split second, instead of the price opening right next to the close of the previous candle, it could open a bit higher or a bit lower, or it could just open right next to it. So yeah, ideally, logically, it should be like that, but it's not always like that. Again, you will see price actions in the market when we begin to look at real charts. So did everyone understand the formation of a candle? We'll go 5 more minutes. Okay. Does anyone understand the formation of a candle? Okay, amazing stuff. So what we will then begin to look at now is look at different candle shapes and what they mean. Okay, so I'm going to go over maybe like two. I'm going to go over like two, and then you understand it. Now, what this will do is eventually when we open a big chart, it will just say all manner to you. It will make sense. Those things that you've been seeing and it just look like jargons, doesn't make no sense. For some of you who haven't traded before, and for some of you who have traded but have limited knowledge, you will then begin to understand a lot. It will make so much sense. You will realize that chart is not just green and red. It's actually a conversation going on. Okay, so let's look at, so these candlestick patterns, okay, these are called hammers or shooting stars, inverted hammers or shooting stars. What, if you see them in the middle of a chart, what will it say to you? How will it influence your action? I'm going to show you that now. So let's look at this next slide. Okay, so let's assume that this is a gold chart. Okay, let's just assume that this is a gold chart, and if you look on here, you can see different candlestick patterns. I said different candle shapes. Okay, different candle shapes. So let's just analyze the candle shapes quickly, and then we'll look at. So look at this first candle. Can everyone still see my mouse? Please tell me you can see my mouse, because I want to show you something really, really quick, and I want you to see it. Can everyone see my mouse? Yeah. Okay. Cool. So if you look at this first candle. Okay, look at this first candle. From what I explained to you, what it simply means is because these first 4 candles are bearish candles, which means price was just falling continuously. Okay, so in this first candle, what happened was the price opened here. Remember, every red candle, the price always, the body shows the opening and the closing of price. Okay, and for every red candle, price closed lower than where it opened. So in this first candle now, for instance, price opened here. In this session, and let's assume that all these candles represents hourly, okay? It represents it's hourly candles, okay? So in this particular hour, price opened here, came as high as here, came as low as here, and it closed here. Now, ideally now, the next candle should open right next to the close, isn't it? But you see it opened higher. So it means whilst price was here, and people were buying, okay? People were buying, so price kept on going up, and this 1 hour finished here. And then within a split second of this next 1 hour candle showing up, people bought more. So hence price opened a bit higher here. If we were still within this hour when this activity happened, what it means is the body of this candle will have shrunk, okay, and will have stopped like around here if we were still within the same hour. But because the hour candle ended here and a new candle had to show up, boom, price was already here when price went. Because don't forget that beyond these candles, on the left hand side or on the right hand side of the chart, on the right hand side actually, you would see prices there. Okay, so you will see prices. So as the candles are moving, you will see a faint line that runs across the screen to the end just to pinpoint exactly where price is. Okay, so these candles are not just candles; they are price. It's equivalent to a price. Have you ever seen a chart before? It's always been something on the x-axis against the y-axis. Okay, so it's the same logic. So yeah, this next candle showed up, and you can see I have candles where either at the top or the bottom there was no wick. It simply means the price opened here, and in this session, price never even went higher than where it opened. Okay, hence there is no candle wick at the top. So price opened here, only went all the way down, came all the way down here. The buyers pushed it up a little bit, and then in this particular candle, at the end of the hour, price was here. Hence, the body of the candle is a very big bearish body with a little candle wick at the bottom. No candle wick at the top because price never went higher than where it opened. Okay, and then boom, the next candle shows up. Should show up next to it, but you can see this one is just tiny bit offset, not as offset as this previous one, because the opening of the new price was just a little bit higher than the close of the previous candle, as opposed to this huge jump here. And sometimes you can see a jump that is just even so high than the candle, like price can jump like crazy. Okay, so in this session, price came this high, came this low, closed here, opened again the next candle. Again, similar to this, price didn't go higher at all, only went down. Yeah, because it's a downward trend anyway. So the selling pressure is high. Okay, so price just keeps going down, 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 down. Okay, came this low in this session, pushed back a little bit by the buyers, closed there, shows up. And okay, so, and this is a very, very interesting one now. We said when you see a green candle, it means price closed higher than when it opened. So look at the jump here now. Price closed here. Price is supposed to open next to it, but price opened this. So it means between the close of this candle and this, a lot of people sold. Like price literally just went down, like boom, open here. Okay, and then came this low in this session, went this high in this session, and price closed up here. Hence, this is a bullish candle right in the middle of a bearish trend. Okay, so price is going down, 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 and then boom, it looks as if there was a hope, but hey, the sellers quickly came in and showed that, look, hey, the hope is not here yet. So boom, two bearish candles erased this bullish candle. Yeah, but a reversal happened. Okay, this is what I want you to see. Remember I mentioned something called a reversal. Why did the 3rd and 4th candles start in the same price? The 3rd and the 4th candles start in the same price. You mean here? Is that what you mean? There. Is that what you mean, Sumi? Do you mean right here? Okay. Well, if you look at it, it's not even like the same price. It's still a little bit offset. It's a little bit offset. But hey, ideally, it should start there. Okay, it should start there because think about it. It's a split of a second. This 1 hour candle was over right now, and then the next second brings us into the next hour. So ideally, price should start exactly where the previous candle closed, but it's never the case. Like in the split of a second, people have executed multiple trades, thousands of trades all over the world, which pushes either price either up or down, depending on what direction those people are putting in their investment to back. So yeah, so ideally price should open. You can see these two transitions where it's almost on the same price. This one and this one. But look at the jump in this one. The price closed here and came to open here. Look at the jump. It's huge. Okay, and then the buyers pushed it up, but they couldn't prevail. They couldn't change the trend, so the sellers resumed it, pushed the price even lower. Like in this session, the tip of the lowest price took out the low in this candle. Okay, came lower. But yeah, so this is now boom, an inverted hammer shows up. What does that mean? Okay, so I've seen all this happening: low, selling. A little bit of buying happen, selling resume, and then boom, and hammer shows up. What does that mean? Now, you never know the shape of the candle until the candle closes. Okay, until that time frame closes, you don't know what shape the candle can form. This candle, if time was still going on. So imagine if we looked at a 3-hour candle. If we looked at a 3-hour candle, these 3 candles will be one candle. Does that make sense? will be one candle. And what we would have is we would have one long green candle. Just picture, so if you're artistic, yeah, picture all these three candles merging into one. Just picture stacking their bodies on each other and make it into one candle. What you will have is a long candle, a big green body, a little bit of wick on the top, and a tiny bit of wick at the bottom. If these three candles were to be combined, so because you can look at your chart in 3 hours candle as well. So if we were to look at this in a 3 hours candle, what it means is, so for example, let's say, forget about this first candle now. This three candle will become a long red candle. And then this three candle, you would have, it will be one candle, and what you would see is a big red candle as well, because don't forget that these two red will just replace this green. Boom. They will just replace this green, and you will see one long red candle with a little bit of wick at the top, a little bit of wick at the bottom, and then these three candles will be a very long green candle with a little bit of wick at the top, a little bit of wick. Again, when we're looking at proper charts, we would look at different time frames, and we would see how the candles merge. But to be honest, you wouldn't be looking at that really in trading. You're just trying to spot reversals, and you're looking at some candlestick that indicates, that supports the reversal that you're looking for. So in this case now, this falling trend, an inverted armor shows up at the bottom. What does that mean? According to trading and according to patterns and according to history that has repeated itself, every time you see a falling trend, you see a price falling, and you see an inverted hammer at the bottom of it, a bullish inverted hammer at the bottom of it, it's signifying a reversal. Okay. Now, when you see that, but like I said, you never know the shape of a candle until that time frame closes. So let's say this is an hourly time frame. At the close of this particular last hour, we've now seen that the candle has formed an inverted hammer. Okay. So in my head now, I'm thinking this signifies a reversal. Okay. That means this falling trend is about to be over, and price is about to reverse and climb. Oh, now, so if I was selling along this fall, as soon as I see this, it's telling me take your profit. Okay, take your profit and get out of the market, because price is about to turn around. So imagine if I sold here, okay, and let's say as prices come down all the way down here now, say I'm in £200 profit. Yeah, I need to lock in my profit here. If I don't, what will happen is price will come back up, and I will start. You'll see 180, 150, 140, £100, £80, £20, and then price comes up here. And God help you, if price continues to go higher, you'll just be in minus. Okay, so a profiting trade can end up turning into a losing trade if you do not know when to come out of the market. Okay, so ideally what you want to do is, if you definitely know that a reversal is happening, you lock in your profit and you take another trade in the opposite direction. So as price continues to go up, you begin to make another profit on a new trade. Okay, but should I just jump into the market when I see this reversal sign? No. A good practice is wait to see the next two candles to confirm that the reversal is happening, then you can take the trade. Some people are very risky traders. They like to take risks. As soon as they see the candle, they'll just jump in. So, you know what, I don't care. I want to ride the train. I want to take every single pound. Some people will do that. Personally, I think it's not a very good way to trade. It depends on you as a trader, your experience. And for example, if my decision to jump into this reversal is not just based on the candlestick, it is based on the fact that I know that at this price level, price is going to turn around. Okay, so it's a combination of the candlestick pattern, the price when the reversal is happening, and let's say a news just came out, and I know this news is positive, so it will change the negative outlook of this particular asset. So you can have multiple confirmations, okay, that could cause someone to just jump in as soon as they see the candlestick. So you know what, this is it. Maybe the candlestick was the last thing you're waiting to confirm, and you just jump in. But some people are very, very cautious, and I would advise cautiousness. I mean, I'll take £160, out of a £200 move, and be extremely sure that I was right and sacrifice the £40, than jump in too early and the market just continues in the direction it was going and I just lose money. Okay, so it's a good practice as a beginner, as a trader, to be cautious. Okay, it's better to make less profit than to make no profit. Less profit constantly, your capital still grows. Okay, so ideally people will wait for 2 more candles to confirm, and you can see once the 2 candles shows up and they took out the top of this previous candle, it confirms the reversal, and most of the time you see that price will then begin to, price will never go up straight. It will still, form like a zigzag, but you'd see price begin to gravitate towards the reversal. And the case is the same. Whatever happens on the way up happens on the way down. Okay, price was climbing up, and then boom, a shooting star shows up. Okay, a shooting star simply means an inverted armor at the top of a rising trend. Okay, and then you can see what happens after 2 candlestick confirms the reversal and price begins to fall. So so that's where we're going to stop today. I hope it's made sense so far. Again, we're going to spend a lot of time doing this. On Wednesday, we'll come back to it. We'll look at charts, try to look at these candlestick patterns. There's so many candlesticks. There are more candlestick patterns that I will show you. There are double candlestick. This is single. There are double. There are triple that I will show you. And then we'll begin to make sense out of them on the charts. Our time is fast spent. We spent 10 more minutes above our time. So guys, this is it. On Wednesday, I would show you we would open up a live chart. The market will be open, and then we'll try to spot some patterns. And I will show you, I'll talk more about, on Wednesday, I will go over all the patterns because now you understand candles. So I'll just show you the patterns, and then I will begin to show you support and resistance. Okay, support and resistance is the biggest tool you have as a technical, doing your technical analysis. You want to know where the support is. You want to know where the resistance is. I will tell you what those are on Wednesday. So I hope the lesson today has been informative. I hope now you understand candlesticks. You understand the formation of a candlestick. You understand a bullish candlestick, a bearish candlestick, the formation of the candle, the opening price, the closing price, and how they represent time frame, and how a candle closes and how another candle opens. And at least now you know a hammer candle. That's where we're gonna stop today, and we'll carry on from there on Wednesday. Does anyone have any questions before we? A lot of information. I know. Well, this bit is the most important bit. If you get this, then everything else I've said will make sense. If you don't get this, then it's just going to be long, because this is trading. Okay, this is trading. Interesting to you. Amazing stuff. So that was why I made sure that I prepared your mind to understand these things. Anybody else? Have any feedback before we wrap it up? Anybody else? Do you guys all understand this? That's the most important thing to me. I want to be sure that you understand it, you get it. I'm only hearing from Roy. Where's everyone else? Do you guys get it? Does this make sense to you? Do you understand the Japanese candlestick? Yeah? Again, the lecture will be available via the slides will be available, and then the recordings will be available as well to listen to again. And then the more you listen to it, I guess you will understand it. You need to go through it again. I thought so as well. So go through it again, and you will understand it more. And of course, like I said, we're going to spend from now to the end of the course, we're just going to be talking technical, combining different things. So I don't expect you to fully understand it on the first day. But as time goes on, it will just become second nature. You will understand it. So thank you very much, guys, for joining again today. If you have any questions for me, don't wait till Wednesday, please. Do not wait till Wednesday. Ask in the group, and I will answer. I have some questions if I can text you. Put it in the group. It's Dilo in the group, isn't it? Yeah, so Dilo, put your question in the WhatsApp group, and I will answer you. Okay, I will answer you. So if anyone else has questions, please put in the WhatsApp group. Don't wait till Wednesday. Ask your questions as soon as they come to your mind, and I will I would make sure that I answer everyone's question. So thank you very much, guys. It's been amazing speaking to you guys. Share your questions in the group. That's right. It's been amazing speaking to you again today. I look forward to seeing you guys again on Wednesday, but I do not expect you guys to be quiet till Wednesday. Please say something, ask questions, be sure that you understand what you're doing, and get your demo accounts ready because we will start going into the market from Wednesday. Okay, I would expect every one of you to take your first trades from Wednesday, and then we'll review what you've done between Wednesday and Friday on Saturday. Yeah. So have an amazing weekend, guys, and I shall come back away again on Wednesday. But we'll carry on the conversation from the group. Thank you very much. Have a lovely weekend.
Thank you.
Yeah, thank you, Shani. See you.